Ask for settling down.
Just say 1, 2.
1, 2, 1, 2. One, two, 1, 2.
Until you are you
Morning, morning, morning. It's not such a sunny day in sunny Ezulwini, right? But I'm hoping that the heaters are helping. We are trying to make this place as usable as possible, as our procurement always says, right? Can we just settle down? We're asking for just probably 5 more minutes for everyone to settle down so we can start. Thank you. Le building ngathi nesibusiso sihlale sisho ukuthi siya kuma breakfast meeting but normally bese siyaphuta kufika noma sifike sibancane but when you look at it both from a shareholder point of view but also from a media point of view, you showed up in numbers, and we don't take this lightly. So siyabonga kakhulu, and We met last year almost at the same time. We almost got it right. It was a year ago where we introduced you to the building for the very first time. And we met in our training room that side, and we said, let this be the first of many. So we appreciate the fact that we have actually made this the first of many. And for most of you, sorry, apologies. So for most of you, we've actually gotten to meet in this place for a whole lot more times before today, and we thank you for that. We are here as myself as CMO for FNB Eswatini, Dlamini, and I'll let Hlengiwe say who she is.
Good morning once again. I'm here as Hlengiwe Msidi, Company Secretary for FNB Eswatini. Thank you.
Okay. The split says it all. The split says who we have in the room. Emsebentini wami la ngisebenza khona bahlale bathi imedia yakho. So yes, and I appreciate that. I acknowledge it and I love it because I have one disclaimer. I've loved the media, I've loved journalism kusukela kwaqala. So we've walked the journey with most of you from the media as counterparts, as adversaries, as people that we need to negotiate with sometimes to ensure that we frame what we need to frame in the right way. So I would like to welcome you from an integral point of view as you guys, as my partners in the business. We would not be able to do what we do and tell the FNB story in the way that we tell the FNB story if it wasn't for the media. And I know it's too early to clap hands for our local media, but can I just ask that we acknowledge the role that they play as the fourth estate and as partners in all that we do. Cela sibashayele ngenkani. I am gunning for Hlengiwe to match that with our local shareholders because yeah, we started a marriage over a year ago. Well, just about over a year ago, and I think begula kwasayinwa konke, and we were clear that this is a marriage that was going to last, and clearly 1 year on, it's going great. And the proof of that, I have this other disclaimer. I didn't tell everyone that we were doing these. So this says we've closed the books and brewed a great cup. If you scan this, it leads us directly to our annual financials. So that's a self-fulfilling prophecy, right? Let's hope that CE and everyone else that follows essentially lives up to this. So I don't know whether the bank's books ever close, but yes, for this annual financial year, they have. And I think in honor of that, we've decided, Kutsi, can we bring all of our stakeholders? Well, last year we had just the media. Can we bring all of our shareholders as well as the media to just try and give essence to the storyline? What were we intending to do? Where did we eventually land? And how does that make sense, not just for the bank, but also for our customers and also for Eswatini holistically, because we know we are meant to be, and we believe that we are a responsible corporate citizen within the country. So therefore, it's not just about the transactions, it's not just about the lending, but it's also about what role do we play as FNB Eswatini in making Eswatini better. So with that, as Emaswati always say, mine is short. It was just to welcome you.
Thank you, Zatu. I think she has placed a challenge before me. Unfortunately, I can't match it. But again, just to restate what she has said and also speak to you on why we are here today. So today we are here for our media and stakeholder engagement on our financial results for the year ended to 30 June 2024. So this year is extra special for us. They have always been special in that it is just not numbers for us, but it is a collective effort from our employees, stakeholders, our loyal customers, and also our shareholders. So this year is extra special in that this is the first set of our financial results since we localized our shareholding last year, December, and also listed on the Eswatini Stock Exchange. So with that, please allow me to make a special mention of our local shareholders. In no particular order, we do have representatives from the Eswatini National Provident Fund, from the Public Service Pension Fund, from SNAT Savings and Credit Cooperative Society, Sibaya Umbrella Provident Fund, from Old Mutual Swaziland, as well as our FNB Eswatini employees, which theirs are represented through a trust. So without wasting...
Yeah, she's upped it. She's mentioned them by name. So, Nyangati Nyansanza. So, it's fine. I won't get to that. But yes, you've upped it.
Thank you. So without wasting further time, given that it's also a chilly morning, may I please, with your permission, of course, welcome our Chief Executive Officer, Dennis Mbingo, to speak or to highlight the financial results. I hope you're already accessing them through the code that you've been given. So he'll also highlight how we have been able to navigate our operating environment. So please allow him to finish his presentation, and we'll then have a more engagement session afterwards. Thank you.
Thank you. Morning. Can I borrow the mic, Chengwe, as a backup? I love technology, but I don't always trust it. I'm getting a third mic. This must be an important day. Are you good? All right. Morning, everyone. I hope I'm very audible around what today is a room, and my voice can go through. Zethu and Hlengwe mentioned something about chilly weather today. I hope our numbers won't be matching the weather. May I just recognize that I understand we've got colleagues from the FSRA, important people in our lives, from the stock exchange, our brokers who helped to birth the new FNB. Thank you for coming, and I understand that we also have colleagues from the central bank, if that's correct. So welcome. I would also like to reiterate what Zethu has said around welcoming the media. We take you very seriously. Moments like today, for us, you can flip to the next slide, are quite important, especially because during the course of this year, we are expecting in April 2025 that we will be celebrating 30 years in the country. That's a big development for FNB Eswatini, and it's not something that we take lightly. So thank you for being here as part of that celebration. There are two key presenters for this morning. The first is obviously myself with the Chief Financial Officer, Mr. Njabulo Dlamini. You'll see him shortly. He'll be joining me on stage just soon. I'm saying this morning is actually quite important because it is opportunities for accountability. We take accountability very seriously as part of the FNB and FirstRand leadership model. This accountability between us and stakeholders and creating these moments where we can connect is a critical part of how we run the business. It also provides an opportunity for us to educate around where FNB is, where we see the country, where we see developments that impact the industry and beyond, and also allows us to take questions and criticisms where that is warranted. So if you feel you need to ask questions or engage, we're very comfortable with engagement. I think that point must be well made. It's ingrained in how we do things. So it's part of why, as Zethu said, we've asked you to be here with us today. Now, still in the spirit of accountability, I'd just like, if we can flip on to the next slide. The people that take primary accountability for everything that happens in this business are the ones that you see on the screen. I happen to play the role of chief coordinator, but these are the people that should take the credit, they should take the criticism, they should take the blame when things go wrong. So I just need them to rise just for a few minutes so that you can see them. Exco, if you can just please rise so that the meeting today can recognize you and also know who to aim for. And I know one of the most popular roles, by the way, the Exco is the one who gives out money or manages the giving out of money, Tandega. So I can say openly in the room, if you've applied for a loan or want to apply for a loan, you don't start with me. You start with the segments. If you're not happy, you talk to Tandega. She'll share a number after the meeting. I just wanted to appreciate a few people who are sitting at Exco for the first time today and for the meeting to know them. Sorry, the previous slide. Camilla, who's our treasurer. Chantel, who's done a fantastic job with the commercial portfolio. Dido, who's our CIO. We had to go fetch him from somewhere far. And hopefully he pays back the trust and the effort. Kuku, who's joined us as our chief risk officer. Who is Kuku? As an appropriate risk person, she'll always sit at the back. And then if you don't get happiness with these guys, we have a very strong board. I've been very lucky in the time that I've been with FNB that I've served with a board that I've gotten to see as chief excellence and enablers. They've held us accountable, they've challenged us, they've asked us to go where we may not have been comfortable. And they've pulled us back where they've thought that we're running a bit too quickly. So we've been very fortunate to be led by this board. And you can see that we've been deliberate about diversity. And also diversity in all its forms, by the way. And I think especially this year, we do want to recognize the presence of, in the board, as new members, Dr. Sibongile Gumbi, some of you might be very familiar with, and Mr. Vahid Monajem, who also just joined us. And then Ms. Sharon D'Souza is, I think has finished her last term in the board and will be moving off in compliance with the regulations. So these are the board members. If you don't get happiness from us, know that there is an escalation process within the bank. So I think of significance as part of this accountability story as well. I take a lot of calls and concerns and question marks from customers. If we can flip on to the next slide, please. And I wanted to abuse this opportunity today, not use it. That when you want help and you aren't getting it, we actually have a chief experience officer, a head of customer experience, who gets paid to do nothing else but to solve problems. So she's the chief problem solver. I was very kind to her this morning that I haven't put a mobile number, but we'll make sure that you get it. If there's any unhappiness, you think there's blockages anywhere in the system, this is the person who solves our problems for us. Ms. Tembi Slombo. Tembi, if you could just please, just a short one. A very experienced banker and one we're very comfortable with. And now, if for any reason, none of the guys that I've presented this morning do not deliver as you expect them to deliver and as I've presented them, the board has been very brave enough to get a person who will make sure that they deliver. So proud this morning to again introduce, I know I've done it in a couple of fora, Mr. Thokozani Dlamini is the CEO designate. Thokozani, please, Velangos. He's not happy with me this morning because he's been insisting that I should wear the FNB pin. I brought it, I just forgot it in the car. So Thokozani will be taking over, hopefully in a few weeks, maybe in a couple of months. I'm very keen, and he's come in with a lot of energy and a lot of enthusiasm, and he's been very keen to get his end steady. And I feel quite blessed that we've had guidance from the board to make sure that succession planning makes sense. And we communicate to the market, and I especially am the one who's introducing him to the market and especially our clients. If you have any questions for him, the CMO, I think, will mention later that we are planning a special conference for you to fire whatever shots you want. It's not today, it's not today. He'll get his own session where you can go as far as you want to go. Today is my time. So no, we are making special arrangements for a dedicated engagement event, and we're actually looking forward to it. So thank you, Dlamini. Thank you for trusting us as your next home. All right, can I get into a bit of the numbers? I will talk a bit around how we read the operating environment. I won't go into too much detail. We can cover what you may think we have missed in the question and answer session. But essentially, we've been very lucky this year that we've operated in an environment that has demonstrated improving stability. And whilst there are concerns around the operating environment and the economy, those questions are just as global as they are local. We've had relative stability, but there's just a few things that we wanted to flesh. So GDP especially has been positive since the pandemic. We see a lot of material going out in the media around where our GDP growth is. It's an important number for a developing economy that you always show progressive growth when it comes to GDP, because that is how employment is created, that is how opportunities are created. And Eswatini in the last couple of years has sustained our positive numbers. We do think, though, that there is an opportunity for us as a collective to try and help get these numbers higher, because it is not going to be an easy road to solve for all of the social challenges that we have, and I'll talk to one or two later. We struggled with inflation in prior years, again due to global developments. We've had relative stability, and I say this with consciousness because when we say inflation is low, it's not low for everyone. It depends on where you are placed in the economic value chain. We are also quite cognizant of the fact that as much as we think inflation has sort of recovered from what we thought was bad coming out of the pandemic environment, the slowing down of price increases is also at the back of fairly high increases in the past 2 years. So people don't necessarily look at inflation data when they decide if they can afford stuff. They are looking at the price of bread and the price of milk and the price of groceries. So it's a good number, a much better number than I think what we've shown in previous financial years. But we appreciate the fact that it's still a challenged environment in terms of affordability. So we're not blind to that. But even with that background, we've had a fairly stable interest rate environment. I think it is key, as part of just painting a picture on where the economy stands, that we've had, it was important for us for the country to go through successful national elections. We are watching and listening around the continuity from those elections to what will policy look like going forward. There's been a lot that's been said through the media. We listen to a lot to what our policymakers say, but we are still looking for that cohesive policy line that gives very clear direction around where the country is going. At this point, there are no particular discomforts. It's a question of just getting better understanding as the government stabilizes. We do carry concerns around global stability, especially around conflicts. I think one point one should make is, I think in previous days, global conflicts could almost be localized at certain instances. That's no longer the case. When there's a disruption anywhere in the world, our immediate response, if it happens at night, our immediate response is to check what's happening to financial services in our part of the world, what's happening to the policy environment, what's happening to interest rates, what's the likelihood of impact in terms of inflation and the like. So we, as connected as we've become, the more connected we have become, conflict can no longer be localized. A small fire somewhere around the world burns right through. There's a conflict in the Middle East. We stress so much that we met some of our bigger clients when it started and just checked, are your supply value chains protected? Is there any engagement we need to have around assistance you might need in routing anything that is imported from any part of the world that has to be routed through the Middle East. So as much as we might be in a small part of the continent in Southern Africa, global conflict is a material impact on results. We are watching again the El Nino story. And are trying to set up infrastructure within the bank to become a lot more climate sensitive and to develop an ability to forecast the impact so that we can decide where to lend, and how to support. And then we're also appreciative that at least regionally, we've had relatively successful elections, and that fits into the stability story. I'm happy to take questions, by the way, as I've said, when we get to the end of the presentation. Having seen operational stability, if you can flip on to the next slide, there are concerns perhaps that are emerging with a lot of these changes. As change happens, opportunities and gaps do happen do show up that people do exploit. So the first one that we wanted to highlight this morning is that globalization and regional integration is a theme and a very welcome theme for us in the banking sector, but you think when you look at what's happening regionally and globally, there's probably there's multiple conversations that are necessary for better alignment of all of our countries' intent, regional policy frameworks, because you can see that as much as we talk globalization, we talk regional integration, the individual acts of different countries, some of them tend to challenge that, and you're seeing it in the policy framework. In some instances. So we do think there's an opportunity for a cohesive story coming out of, especially for Africa, what do we mean by integration? What do we mean about all of the trade arrangements that we have to simplify the movement of the right skills, to simplify the movement of capital across our regions? And that fits into the regional payments landscape. We've had a lot of questions, especially from the media and our customers, around what's happening with payments. There are good changes that regional regulators have agreed on to help simplify the movement of flows cross borders, but significantly to help protect the movement of flows across borders. So there is a remodeling of that reality, and we are asking customers to bear with us as we go through the process. It is uncomfortable. We have given our input where we can, but it's a necessary part of the broader modernization agenda. As part of that, again, liberalization and change of model around payments, we see an amazing opportunity for new players to come in because no single entity can service the full value chain without any hiccups. So as much as we are comfortable with the portfolio of services and products that we have and we want to expand those, we do welcome the opportunity for other players to come in when it comes to especially payments. As long as they're able to bring prices down, they are able to ease cross-border flows. But that too comes with risks. We are concerned and we are, I think, trusting our regulatory environment to look out for entities that may not have appropriate risk infrastructure. When you have to handle anyone's monies or funds, you have to have appropriate mechanisms and infrastructure in the background. It's not just about creating an opportunity or a channel for flows. And we would caution the public that when you want to switch to new service providers, please do your homework and do inquire from whoever your bankers are, from regulators, and just be comfortable that you do due diligence, because not everyone who advertises on social media or advertises on newspapers is appropriately licensed and appropriately regulated. And we would specifically caution around this excitement that, as much as cross-border flows may be moving slightly slower, perhaps perception-wise, someone else is saying they can actually move it for us quickly within a day. Just check who you're giving your money to and make sure that they're appropriately regulated and appropriately trusted. And I think there's generic use. We've seen in conversations with some of our stakeholders that we have more and more people that are calling themselves a bank. A bank has to be appropriately licensed. Do ask a question. Where is your license from the Central Bank of Eswatini when you operate within this environment? So it's just to raise caution that we've had incidences in this country where public funds have require explanation around usage. Let's minimize those by asking the right questions and asking the difficult questions, and I hope the media would play an important role there. We are worried about the emergence of cybersecurity threats. Now, as I said something around globalization and the progression of technology, with everything that shows progress, there's also, again, risks. One of the things that concerns us is that with cybercrime, crime has an opportunity to actually do more damage through a single event. So the single event risk has actually shot up. When before you could pinch a few thousand there or a few million there, there is an opportunity for those that want to abuse all of the good that we've gained to actually take a lot through a single event. So again, it's a statement of caution from ourselves. We are on the lookout. We are constantly monitoring our systems, and we're very comfortable around what we are able to do to protect our own systems, but we're asking customers to please also engage the right experts and expertise to make sure that you don't have vulnerability on your own end. I know when these things happen, the default conversation is that the bank has lost money. I can't think of an incident where our platforms or our systems lost money. But the vulnerability tends to be on the client end. And where we need to engage, where we need to consult, and point you to the right people that can look at your platforms, please let's have the conversation. Data privacy risks, I think in the last couple of years have been quite pronounced, especially for Eswatini. I have to speak to this with some caution in the presence of the media. We understand the right and obligation to report on malpractice, right? And we are not going to interfere, but for us as a bank, we've been very guarded to make sure that whatever leaks to the public is not, one, coming from FNB, two, that the privacy of our customers is protected at all times. Where there is risk or indication that any of our employees might be caught up in this romantic view that showing data to unauthorized parties is exciting and might create a story. We deal with it quite decisively. This is an issue. It doesn't take away, by the way, the responsibility of the media and any other parties or regulators to manage what they have to manage, but nothing in what we do should risk innocent citizens and people who transact honestly. So there's a balance game that we are playing there. We were very concerned about unemployment trends. I mentioned positive GDP growth. It is not one that we necessarily can take to heart without question, until such time that your neighbor and your neighbor's neighbor, or the guy you went to school with and his kids have a job. We should never be okay that GDP is positive. We're happy, but there has to be that GDP growth, that economic growth needs to feed into what people experience on a day-to-day basis. We all have a collective responsibility to create jobs and have engaged policymakers, by the way, to say, how do we create a coordinated effort to encourage employment, even as when technology is playing a bigger role in our businesses. So as FNB, there is a decisive stance that we've taken that technology should not necessarily replace jobs. We want to leverage technology, but we also want to create jobs. It shouldn't be one or the other. There must be a path we can play there, and we have challenged our regulators to say, and our policymakers to say, can we not have a national position that just encourages companies to hire where they can, and not use technology to replace headcount, because there is a social reality that we cannot ignore. You don't want to succeed in a desert or in a setting of isolated success. Success has to be much more broadly spread for your own success to be sustainable. And then we do have a challenge, by the way, around a lot of what we see as possibilities around technology is being limited by availability of technology skills. So if you are sitting in the room and are trying to figure out what to do next in terms of changing your career, go back to school and study technology. You probably will guarantee yourself a job. There definitely is a gap. And I think there is also, especially again with our friends from the media, an opportunity to talk a lot more about this. Whether it's at a corporate level, by the way, or at a government level, a lot of our service delivery as individual entities or as nations trying to service the public is also subject to where are we in the technology investment piece. So we appreciate policy, we appreciate but a lot of the answers that we seek lie in technology. And I dare to say, by the way, some of the challenges we have with the health sector, the answers lie in technology in terms of the provision of healthcare. But post this conversation, coming back to FNB specifically, we were very lucky that during the year, we had most of you in this room to celebrate the listing of FNB on the local stock exchange. Again, thank you for the support we received from the exchange officials and from the FSRA and the Central Bank of Eswatini. And just to flip on to the next slide, what that meant is that for the first time in our history, as Zetu and Hlengo have said, we're no longer reporting numbers that are, or results that are showing just the international shareholding piece. We do have 24.99% of the business that is owned by Eswatini through various schemes. It's a critical development, and it fits into our shared prosperity model. And we are still quite happy that, quite chuffed that we've got employees owning 4.99% of the bank. And I will make an open invite to the entities that are showing there that we do think there is an opportunity for us to collaborate a lot more closely in terms of solving for our membership. If you can look at who sits in the membership of the PSPF, who sits in the membership of the Provident Fund, All Mutual, Sibaya, SNAT, there is a lot of value sitting there. And we do want to find a way of collaborating a lot more effectively. Now, significant to this is that when the new entities joined the first Rand family, I think within 3 months, was it 4 months, Njabulo, they got a dividend. And I don't know if they've invested in anything before where they got a dividend that quickly. And it was 84 million emalangeni in total. And today, what with the CFO's permission and perhaps with the company secretary, is that Njabulo is motivated with the board, and we don't think the 84 million that we paid in April was enough. I think Njabulo wants to pay more. So to our members, the dividend that we paid of 84 million was for the first 6 months, July to December. We're looking to pay more, a slightly higher figure for the second half of the year. So we do have the figure. We do have regulatory approval for it. I'm just cautious to respect Hlengo not to say the exact number, but it will be more than the 84 million. We are aware the stock, and I'm hoping management sitting here can go back to their boards to say the decisions that you made, you can take credit. The decisions that you made is paying dividends in the literal sense. So thank you for trusting us. We've delivered. We will deliver again shortly. In a couple of months, we'll be paying the second dividend. And hopefully, the dividend story is not going to stop. That's a note for you, Mr. Dlamini, by the way. If it stops, you know who to look at. If there are any questions again here, we will take them at the end. It has been a very active 2024 financial year. In addition to the listing, we've grown the business quite significantly, setting new benchmarks, some of which we are going to show. It is important in a country our size that we show double-digit customer growth, and we've shown this every year for the last 5 years, where we've been growing customers somewhere between 10 and 15% consistently. So whatever, however we may read the business, there are very strong metrics that says the brand and what it offers to the public is still very strong. We've shown positive growth through a lot of our product houses. We've expanded footprint in response to the customer growth, by the way. Matsapa Lifestyle, you would have seen the Butleni agents we've added. And we are looking at having micro-representation right around the country to, again, minimize the time that people take to access our services and to push this digital migration effort. We've done a lot of work to deploy new self-service technology, coin counters and bulk note counters, SIBO, in all of our outlets, and are looking to do more. And yes, during the year, we moved into this new campus, and then we'll talk to the changes in the later around our landscape. In spite of all of this, one of the things that we've been asked and encouraged by our board and not to ever forget is that linked to what I said earlier around make sure you do not prosper alone. Whatever we make, there's a portion of our profits that is dedicated to strictly social impact investment. And as part of our a shared prosperity model. And we've done quite a bit this year. We wish we could actually have done more. If you can flip to the next slide. We've spent just nearly 3 million in entrepreneurship through the bank and FNB Foundation. We've done a lot under sports development, just over 2 million there. In fact, this year, this figure is almost double in the next numbers that we're going to report. We've done a lot around gender diversity and inclusion, and I think we've spoken quite openly in terms of supporting gender-based, anti-gender-based violence programs, which unfortunately this country needs, and unfortunately being a key word there. And then around education support, there's been about 1.5 million that has gone there. And I think for the first time, we're starting to have conversations around how can we support the climate change conversation or discussion. And there's a lot more we can do going forward there. And then health, arts, and other has been that much. When we present next year's numbers, I think Njabulo, all of these figures will be much higher. So we aren't just a bank to extract value out of our business. Part of the value that we extract, we have an obligation to give back, not just through dividends, but through a social dividend as well. So that's what I think that slide was meant to work. Can I just ask Njabulo to come through to unpack the numbers and talk about ROEs and ROAs and all of those things that make us sound smart during dinner conversations. Over to you, sir. Next slide, please. I think they thought your voice would be big enough.
Yeah. Morning. Good morning, everyone, and thank you, Dennis, for providing that context for the financial performance. So I think, as Dennis stated, I'll present the numbers for the financial year. They have been audited by PwC. They have been approved by regulators, the Central Bank of Eswatini and the Eswatini Stock Exchange. So these up here are the key financial metrics that we use to measure performance throughout the year. And I think from an overview, we've had a very strong 2024 financial year. This is emphasized by our profit before tax, which has grown 11.6%, and then further emphasized by the return on equity. So it demonstrates that the business is generating strong shareholder value and returns to its investors, and through that to Emaswati that are invested in our local shareholders as well. And I think from a balance sheet perspective, we have seen good growth as well there. So our total assets have grown 15% throughout the year, but then with that, we have been able to then ensure that we are increasing the yield and the returns on those assets, which is demonstrated in our return on assets at 3%, which has grown from last year to 2.9%. So we are then adding assets that create value. I think then from statement of comprehensive income, what we do see then just emphasizes just the diversity of earnings. So we are a mature business. We are balancing our earnings from both net interest income and non-interest revenue. But I think just to emphasize that strong financial performance with the 12% profit before tax growth. Next slide. So I think here we then have summarized the key contributors and drivers of the earnings this year. I think what we would just like to highlight is just that we've had good asset growth, so strong credit extension and origination, so lending to Emaswati through our credit lines. And then also from a deposit perspective, we've optimized our funding and liquidity strategy. So we are providing in terms of deposit solutions to our customers, which they're taking up. I think as well from a customer perspective, we have then embedded our customer value proposition. So we have grown our customer base quite significantly this year as well, as Dennis has stated, and then also supporting that good transactional growth, so good adoption of our platforms and channels, particularly our digital channels. I think from a pressure perspective, we have then seen pressures coming on the income statement, particularly we have a risk management strategy where we then try to reduce the volatility of the policy rate hikes through the cycle, and we have an interest rate hedge that has then had an opportunity cost of 18 million. Tied to that, we've had to invest in this wonderful building, which we have used from excess liquidity. So there was also an opportunity cost where we have given up yield on interest just to invest in this building, but we are working to supplement that and grow our deposit base again. From just looking at in terms of the key drivers, so I think from a gross interest income and interest expense, I think here from interest income, particularly generated by advances, so advances growth has been strong as stated, but I think we've also then seen increased overdraft utilization across our corporate and commercial businesses, and then also term loan drawdown. So we are providing facilities and people are taking them up. And I think there is still a major opportunity for us to participate in localization of strategic national initiatives that in the coming years, and then to provide sort of solutions that can assist and fund those initiatives. I think from an interest expense perspective, what we have tried is to encourage savings and investments within our retail base and high interest rates and to the deposit holders. So if you have a call account, a savings account, we have actively tried to prioritize passing on that benefit to you guys so that you can benefit from increased savings and interest rates. Moving on to the next one. In terms of non-interest revenue, we have then our operating expenses and our just from there, just from a transactional side, we do invest in our platforms just to drive in terms of efficiencies, but also scale. So I think if you look at it in terms of we are expanding our reach of our ADT, ATM network, our Cash Plus network. We have introduced coin counters, bulk depositors, and that's just to improve customer experience. So we are investing in our platforms just to improve customer experience, but then also we are complying with regulatory developments, such as the CMA low-value cross-border payments, just to ensure that we have that. So Forex on app, for instance, we have putting in development work so that you can be able to access those solutions on your app and don't need to go into a branch to facilitate payments. But I think as well, it will be a continuing pressure going forward. But I think it's just good that we do see exponential growth and adoption of our platforms, and that comes through in our non-interest revenue. In terms of then the bridge statement of financial position, so I think I have discussed that from a total assets perspective, we've seen 15% growth on the balance sheet, which has been positive to see, driven by 18% increase in gross advances, and then also the 22% growth in deposits. So I think I'll leave it there, Dennis.
All right, before Njabulo gets off the stage, we've shown the slide as part of our profit history. And there's something important that one wanted to highlight before the CFO leaves, is that the way the executive especially is remunerated and rewarded is around long-term sustainable earnings growth. So it's long-term stability of earnings. It's not short-term thinking. So we don't get necessarily rewarded because of decisions we've made around what can we harvest in the next 6 months, in the next 12 months. What do we do today to impact the business in 40 years' time, in 20 years' time? So if you look at these numbers, I'm looking at our local shareholders especially. Between the AML strategy, there's an opportunity cost there that Njabulo has spoken of around 18 million. And this property that we're in, there's an earnings opportunity that we had to give up of around 24 million. Had we not done those decisions, the number that you see around profitability would have been in excess of 400 million. So we've seen this, we've focused it, and we've made decisions out of long-term interest to make sure that let's not take short-term profitability at the expense of a long-term gain. And that balancing game to our local shareholders is actually quite critical. So we will make decisions that where we may show short-term pain, but it's because we do believe that those investments can actually spend greater growth going forward. And again, before Njabulo leaves, the second point I wanted to make with this slide is you would have seen in the earlier years, there wasn't a lot of changes around regulations, a lot of changes locally and regionally, by the way. And we, I think the earlier point made around global conflicts, as much as they've always been significant, their reach was somewhat muted to economies that were very small. The dips that you see in 2017, this was a change in regulation that created a dip. There was a recovery. The dip that you see in 2020, that was the COVID pandemic. The dip that you see in 2021, that was the social unrest that we experienced in the country and in the region. But the broader story is 2 points that I think are important as a takeaway. We've always recovered, and we've recovered very quickly. So we haven't just taken pain. We've made sure that when there's a need to take pain, we take the pain, and we've got a plan around how we can come back to stability. That's important, I think, for our shareholder community. And then the second point is we do think that this volatility in our earnings may be a new norm. The stability that we saw in the first 20, 25 years of our existence may be a nice part of everybody's history. I think going forward, based on what's happening globally, based on what's happening regionally, and based on the risk, by the way, that pandemics and climate change are bringing so much unpredictability, this ups and lows are going to be a lot more visible and a lot more prominent going into the future. The challenge that management has is to go back to the board to say, we see these things before they happen, and we have a plan to address them when they happen. So please hold us accountable, and do hold the team accountable. When you think there's a dip, we haven't seen it, we haven't cautioned the market about it, and we haven't responded on time and responsibly to it. Again, we'll take questions. Thanks, Jose. Hopefully you don't mind coming back at some point. And I think just flipping onto the next slide, just to demonstrate, we do want, I think as part of our practice, we've got a spanking new CEO coming in, that we do want to actually report account numbers and customer numbers. The industry, for reasons I don't fully understand, doesn't report that, but we do think that it is the right thing to do. And I think when we do publish eventually, all that data will be in there so that you understand the scale of the business relative to others. The next slide, please. And now, when you ask, and I'm using the fact that we do have people from the regulatory arms of government, here is that where is this value being generated from? A lot of what we've benefited from is how carefully we've managed all of our channels, especially self-service channels. We invested quite heavily wanting to reduce the amount of cash that is going into branches. If you look at the top right slide, top left slide rather, and the volumes have gone down, but the actual cash has gone up. This economy loves cash, and it is insisting to continue to use cash. So we can't wish it away. We've provided the infrastructure to manage it responsibly. So you would have seen that during the course of the year, for instance, about 8.5 billion, 8.3 billion has gone through our branches. It's not what we want, but it is what it is. And we've made sure that we handle this a lot more efficiently than before. So we've deployed ADTs, which are now primarily processed as deposit channels. That 2.7 billion that you see there previously would have been queues in a branch, but it's now going through the ADTs. And then at some point, we actually thought ATMs may sort of stabilize, but the demand to withdraw cash through ATMs is still very strong. Our ATMs have dished out 8.3 billion in the last year, and 7 million withdrawals in a single year. So we are a very active economy, relatively speaking. And online banking, despite all of the investment, I think, and effort in the FNB app, has stayed quite popular, paying out just or processing about 110 billion during the course of the year. And then the FNB app is becoming the primary banking channel, especially for retail customers, and I think for the SME sector. So we are encouraging our customers to use the devices as opposed to queuing, and we will continue to improve it. And my hope under Mr. Dlamini's leadership is that the FNB app will match online banking and have a lot of our transactions going through the app. It's the easiest thing we can do. And then, yes, e-wallet remains popular. There's about kids going to school and coming back from school. So e-wallet remains very, very popular. And then around the other self-service, I think devices, I won't necessarily mention too many, but all of them are showing very strong growth and very strong popularity. I will especially highlight the Forex on app. So under your area, this is where a lot of the cross-border flows are moving to. If you haven't used it, please try using it, especially for sending money cross-border. It will be the primary channel going forward. So when we report next year, this number is going to be a lot higher than the 143 million we've had during the course of the year. I would like to recognize, you would be familiar with your rewards. If you've got an FNB card, if you go to a fuel station, please ask for the FNB speed points because it delivers value. We pay a part of that back to you. I wish I could say how much I have sitting on my account. Tandega laughs because she might have an idea. So this has helped because right now those fuel swipes from the consumer base especially, in a year they are swiping nearly $1 billion just because of the reward program, and a lot of that gets paid back to the customers. So yes, I will use this as an advertising platform. And then we've got Cash Plus, which is now generating just well over $1 billion in terms of the transaction value that it is handling through over 600 agents. We do think there is an opportunity here to partner with merchants going forward, and I think in Mnetsi, it will be his call going forward. Just on the next slide, a lot of the value that we have generated, we have plowed back to the business through extending our points of presence. Njabulo says out of the 117 odd million that we spent this year, the majority of that is being spent locally. And it is not random. We have communicated before a deliberate intention for us to spend whenever the opportunity shows to spend locally. And I think we've sustained that, that whenever there's an opportunity, we're insisting on Eswatini businesses to try and support growth of this economy. And then on the next slide, I think we've given a sense of where the business is. We thought in talking to our numbers, we may miss something in the audience if we don't talk about payments. So I will ask some of my colleagues to speak. If you've got the mics, please. Can I just have the mics given to Camilla? Just to give an idea of what's around payments. There's a lot that is happening. I think I'll cover the first slide. We've taken a lot of questions from media houses, from our clientele, and from colleagues from outside the country to say what's happening with in your payments environment. And the long and the short of it is it's in these 3 blocks. We've got developments within the common monetary area, which involves Eswatini, Lesotho, Namibia, and South Africa, that are being driven by changes that have been agreed by the regional regulators. And we've done what we can to make sure that we comply with them. And a big part of the push is to make sure that cross-border flows are adequately reported for policy purposes, but also that they are better protected. The sender is known, the receiver is known, and there is full detail on why those funds are being sent. We may have different views, but there's a legitimate reason why this is being done. For us as FNB, we will show the before and after. We've been able to send monies within the stated countries instantly. We will, in complying with this, maybe just take 1 step backwards, but it's not 10 steps backwards. It's just to take 1 step backwards to make sure that we comply, and we're investing quite heavily to make sure that the customer experience goes back to what you've known before. So that's a time game. The second one is the new national payment switch. It's an industry modernization program being driven by the Central Bank of Eswatini, which we do support. Sibo might say a word or two around that. It's rolling out in the latter part of this calendar year, and it should be getting the news a lot more, I think, over the next year or so. And then to make sure that we stay ahead of these changes, we are investing a lot of money and a lot of effort in making sure that our own platforms are upgraded and enhanced so that the customer experience and the product offering we have around payments is broadened. We certainly are not going to stay behind and watch a very, very important business and a critical part of this economy go through changes without making sure that the customer experience is seamless. So we've asked the guys that work with the payments team to just give a sense on what do these changes mean at their simplest level. If we can flip on to the next slide, please.
Good morning, and thank you, Dennis, for that context. So on the 10th of September, the entire CMA industry went live with the migration from making cross-border payments on the EFT rail to the SWIFT rail. Practically what that means for our FNB customers is that we'll move from making payments, or we have moved from making payments on our EFT platforms or our EFT channels on our online and app platforms to our Forex on app or Forex online platforms. So that's from a process perspective. This has introduced payment cutoff times because SWIFT isn't 24/7. So currently your payments get processed between 8 and 3:30. If you process a payment after 3:30, it will reflect the next day. From an FNB to FNB perspective, our clients should expect to receive their funds within 30 minutes of making their cross-border payments, and the beneficiaries are enabled on their channels to perform global receipts if they haven't received instant crediting. That does sometimes happen if certain details are not aligning as expected with the payment message. From an FNB to non-FNB perspective, historically, our clients used to experience a sort of 1 to 2 days turnaround time if you're paying a non-FNB bank. Now you can expect for your beneficiary at a non-FNB bank to receive the funds within 2 to 3 working days. So that's a factor that's been introduced. We would like to touch on some frequently asked questions that our clients have been asking us, just to sort of clarify them here. One of the questions we've been asked is, will my FNB debit card still work cross-border? Absolutely, that is not changing. Will I still be able to pay cross-border public recipients? Yes, you will. You will just have to get their details and load them as beneficiaries on your global payments platform, on the app or on online banking. Will I need to declare the purpose of my funds when making cross-border payments through Forex? Yes, this is one of the reasons why we've migrated to Forex, is to improve the BOP reporting or the quality of balance of payments reporting. So you will need to disclose why you are making those payments using a BOP code. But on our channels, we make it quite easy. You can search using a keyword and not necessarily the code. I have cross-border debit orders for my monthly premiums on insurance and insurance policies and payments. Will I be able to continue honoring these? Absolutely. Again, please just get your service provider's banking details, load them as your beneficiaries, and pay them as and when is required. What happens when I send money to a personal or business account on weekends or after hours? And I think this is also similar to the question with my children studying in South Africa, can I still send money, stipends that need to support their living expenses? Absolutely. Provided you have their beneficiary details, you can make your payments. When making payments after hours and on weekends and on public holidays, currently you will be subjected to those 8 to 3:30 processing times, but we cannot process outside of working days. We are still working on enhancements, and we expect them to launch quite soon to replicate the current FNB to FNB experience, where your payments will reflect instantly. Unfortunately, we didn't launch them together with the CMA migration, but we do expect to launch them sort of this month. And that will replicate your instant FNB to FNB experience, and you'll be able to receive funds on weekends, public holidays, after hours, so on and so forth. So it is a development we are proactively working on. I currently have scheduled payments for some of my cross-border beneficiaries. Will these go through as scheduled? They will not go through as scheduled anymore because the EFT rail has been discontinued. Please load your beneficiaries on Forex and schedule a reminder to make those payments. I have an FNB credit card. Will my monthly payments still go through? Yes, they will still go through. We have issued specific communications on credit card payments. You will make your credit card payments to your SA account using certain predefined criteria, but we have issued communication to our credit card customers. Can I make cross-border payments through branches? Yes, you can. So while we encourage our clients to make use of the app because it's more convenient and online banking, we do understand that certain clients prefer to go through to branches. You can make use of our branches to process your payments manually, although we do still encourage online channel. Where do I get help to navigate FNB Forex better? Outside of contacting Tembi directly, we do have certain touch points. You can contact your relationship teams. We've got a dedicated a CMA Forex line at our contact center, so please do not hesitate to reach out, and those communications have also still gone out. How much will sending money cost me? That has been published in our pricing guide, so there is different pricing depending on what you are doing. We are working to try and make Forex a lot cheaper than what it currently is. So that is on our radar and something we are proactively working on. What are cutoff times for processing payments? I think we have touched on that. And I think the last one, which has been a little bit of a pain point, is how do I get my proof of payments? Currently, you should expect to receive them via email once you've processed your payments. If not, you can reach out to any of our customer service areas that do service you as our clients to ask them for your proof of payment. But it is another enhancement that we are working on, that you can download your proof of payment on channel, and that will land before the end of the calendar year. So I think those are the main questions, and I'll hand back to you, Dennis.
All right, we will still open the floor for one or two more where Camilla may not have covered all of the detail. If we can just flip on to the next slide as we prepare to wrap up. Sibo, just briefly on the Eswatini.
Dennis, on the Eswatini national switch, I think the most important thing to highlight is it is a project that is undertaken by the central bank under the leadership of the central bank. The country is modernizing and implementing its new payment infrastructure. As FNB, we are fully supportive of the initiative and we fully support it. As you can see, we will be spending a couple of millions, between around 70 to about 100 million in the whole initiative. We do expect that it will come with a lot of disruptions or discomfort, but we will do everything possible on our side as FNB to ensure that this has got minimal disruption within our customer base. Thank you, Dennis.
Cool. Thank you. I think just wrapping it up in the last couple of slides, I will ask Mnese to come through. Let's go to the next slide, please, Sebo. I will ask Mnese to come through because we are quite invested in solving for customer experience. And we don't believe, Camilla has just briefly touched on it, that customers should be seeing branches as the primary interface. Branches are handling what the platforms cannot handle. But a branch is not the starting point. The app, online banking, and all of our devices can handle a lot, 90% of what customers are looking for, quite efficiently. And there are some things that we want to introduce going forward that should even simplify this customer experience more. Next slide, I'll come back to this. And Mnese owns it. So if it works, that's the man to look at. Go ahead, Baba. If it doesn't work, that's the man to look at.
Yeah, thanks, Dennis, and morning to everyone. Yeah, to Dennis' point, the growth in customer numbers also has implications in terms of the traffic that goes into branch and the other channels. And so far, the data shows us that the branch is carrying a lot of traffic, and we are trying to solve for that. So we are working on two solutions or two phases. The first phase is us trying to solution for migrating the traffic that goes into branch through an alternative solution wherein we're using our back office capability. That will help us to make sure that customers that go to the branch and don't want to queue, they have an option or an alternative. So that is our phase one. We're solving for 5 areas, ladies and gentlemen, and these 5 areas happen to be the top traffic drivers into branch. Account opening is the first driver for traffic. We are solving for that. Statements and confirmation letters, they are also a massive driver for traffic into the branch. We are solving for that. Personal loans is another driver for traffic into the branch. We are solving for that. And lastly, the issue of coins, which is on the telling side, including the notes. So the phase one, ladies and gentlemen, is currently live for all our corridor branches, including Hlangano and Peak. We have a solution now where customers, when they go to the branch and they don't want to queue, there is an alternative to assist them using our back office capabilities. And so far, the traffic that we're seeing, that we're migrating, is encouraging. But then the next phase says, how do we make sure that the customer doesn't even have to go to the branch? For all these first 3 areas, which is your account opening, statements, confirmation letters, and personal loans, we're actually at advanced stages of deploying app-based solutions that will make sure that the customer doesn't even have to go to the branch, provided you have a smartphone. If all goes well before the end of this financial year, we would have gone to market for the second phase of the solution, which is you can do everything on the app, particularly for the first three items on the slide. I think I can park it here, Dennis. Thank you.
Thank you. I think Mnetsi has done a great effort together with the ops team, but he's also underselling this whole story. Ultimately, I'm not going to let you off the hook that easily. So ultimately, what we are saying to the market is, you should be able to open an account without going to the branch. That's an important marker that we're going to get to. You should be able to obtain statements and confirmation letters electronically. And the guys, the team have built a brilliant verification model for that. And that's, again, an important marker. You should be able to apply for a personal loan without being made to feel like you're begging for attention and going to a branch and queuing. All of that should be fully remote. And then you should be able to deposit. Coins especially, we're quite excited. You guys are depositing over $1 million a month. It's triple. That is in coins. Like the 5 cents and 20 cents that people are, this economy actually still has a few coins. And you can imagine how much is being saved from queuing with the bag of coins. And Martin, by the way, you should take credit. The Times editor, he called and made a proper complaint a couple of years ago around being made to count and then recount because there was an error and then the teller had to switch. You remember that story? And that created a conversation internally to say, why are people even queuing with the coins? So we've got coin depositors now that allow people to just deposit the coins, you get a slip, you alert the teller. So that has allowed us to sweep a lot of those coins. And then the long-term thought is that we should be able as a business to enable your lifestyle, not to take away from the hours that you have to live your life. We should be primary lifestyle enablers. And it does not excite me when I see long queues in branches because that means we've taken your time to come and stand in a queue, and that should not be the case. And fortunately, the bank has been kind enough to hire an engineer as the next CEO of the business. So these things should be solved a lot more quicker than the financial guy that is standing in front of you. So I think those are the key questions. If we can just go back to the strategy slide. Thanks, Mnetsi. I think going forward, yes, we do have a strategy that I think under Mr. Dlamini we will go to market to try and unpack. But the objectives right now, as we wrap up the current financial year in June 2025, is to muscle in around excellence in customer experience. Obviously, there's a much more, I think, sophisticated story going into that. Business growth is not going to slow down. We do think we can scale this business. There's a big question mark around what should we be. You know, we think we've got a fairly dominant share of especially the retail market, a very strong share in the commercial market. And I think corporate, we bank everyone we can bank. It's a question of what we can do more now. And the big question within FNB is we've built this business. We now almost sound like half the time, with due respect to my central bank colleagues, a technology business that is offering financial services. What can we do more with the technology platform that we've built, with the skill set that we've built to make sure that we simplify how our customers experience us? So there's a lot of opportunity there, and I do think that the team will be coming back to market with a different look, FNB, over the next year or two. And then innovation and efficiency underpins a lot of what we are trying to achieve. And then a big part of the conversation as well is scaling investment in our talent. Everything, as much as we've got the technology, we've got the ideas, everything gets done by people at the end of the day. And I think, ladies and gentlemen, I would stop the conversation here. We've tried to avoid going into too much technical detail, but to give you a sense of how this business generates earnings, what's the relative scale. And I think going forward, we do commit to giving you a lot more data, just to give you a sense of especially our shareholders, what it is that you've invested in. I think for now, take it away that our commitment to provide return it remains solid. I don't know if you can find too many investments within these borders that can give you a return of 21, 22% in a single year. That's a proper number. So thank you, ladies and gentlemen, for your attention. I'm happy to take questions with the team of colleagues that I work with. And as I said, we don't mind questions. We look forward to them. If there are any, by the way, we don't want to force the issue. Zayton Hlengwe, will you coordinate?
Yeah, thank you, Dennis, and thank you for an insightful session. I think, as Dennis says, it's probably time to look into more answers than questions, right? We commit to providing that. But I think in a nutshell, we went out a while ago to say that we have nearly 30 years of giving help that works. And I think in summary, Dennis, what you've shown is that it's not only help that works for banking. It's help that enables, help that pays, help that rewards, help that empowers, and help that enables. So you will see a lot more consistency in this conversation because, as Dennis says, we do want to outline that we are more than just a financial services provider. So with that as a pointer, and also what we forgot to say with my colleague earlier is welcome to the online community, both our FNB staff that are watching us online through Teams, as well as FNB customers that are also watching at this point in time. So we welcome you, although belatedly. So we'll coordinate the question and answer session with taking 3 questions at a time, and Hlengiwe and Sbongseni will assist with just keeping us honest with regards to remembering everything. So if you feel like we haven't answered yours, angeke sibaleke nayo. We commit to openly answering all of the questions. So can I please have the first 3? Babebel.
Thank you, CEO team yakho siyabonga kakhulu, great presentation nemsebenzi wonke wendago FNB ngabamfisha wavele sekumakhada. I want to double click on the share price. What are you thinking in terms of getting the share price, or let me say the value to grow in the stock exchange? Are you planning to float some shares on retail? Because we don't want to sit with a share that we bought at X amount and remains like that for years, which we've seen with the other players. And then secondly, your credit loss is looking very good, actually. It's like 0%. And I'm thinking, what miracle are you doing? Are you becoming crafty with the numbers? My last question, Dennis, is how's the capital in the bank? Are you not sitting on too much capital at the expense of declaring more dividends? Yeah, how is that looking? Thank you.
Next questions, or do you want to take the 3 that are already there?
I think the Cabinet Secretary is encouraging that we try to tackle this.
Okay.
Maybe to inform more.
Okay.
One around, are we ready to make a retail offering on the share? This question was raised quite a few times when we came onto the market the first time. And a retail offering, to those that may not be familiar, is can we allow individuals to own a part of FNB? It has always been the intent. I'll try and answer it succinctly. Njabulo, you can assist and Hlengiwe. It has always been the intention. I think the guidance that we got from the board and from our shareholder at the time was let us be progressive around the shareholding conversation. Doing a retail offering day one was always a complex exercise. We tried it in 2018, and it went into a lot of, I think practical challenges on how to do it right and to do it responsibly. So when we took the position that let us accommodate the process by starting with an institutional offering, but be very deliberate in who we target. So the institutions that are shareholders at FNB are not just narrowly owned. We wanted institutions that have broad ownership and broad membership, so that the retail or individual investors that we could not accommodate can at least be accommodated through those pension funds and asset managers. So that's the second point. And I think the third one is what we have asked for as management from our board is that can we just allow this to stabilize, see how the market and the institutional investors that have participated are handling this ownership, and if there is a business case for an additional offering, let management go back. I'm looking at Mr. Dlamini. Let management go back to the board and the shareholding community to say perhaps we should consider. So the door was never closed. It will be informed by developments. I have my doubts that even with a share like this, that even if we were to go retail, the likelihood is that those first retail takers may do the same thing that the institutionals have done. But the door is not closed. Njabulo, is it succinct enough? Credit loss ratios. Generally, I think the loss ratios in the market are sitting somewhere between, I'll say, 6.8 and 7.2% range. We're at 0.2 or 0.3 or thereabout. There's a reason for that. One, during the time of the pandemic and the unrest, we actually took in a lot of provisions because we expected a lot of things to break. And some did break, but a lot of those clients that we had guarded against recovered a lot sooner. And we were very active in engaging, Mr. Chantal, in helping, not just engaging, helping those clients recover quicker. So we've been able to minimize losses by being active in supporting the critical clients that would have led to us taking more provisions. So that's the first bit. The second one is that our collections are pretty strong. I will ask Tandega to say a comment or two on this, but as the chief collector, she's done a brilliant job with the team to make sure that when we give out money, most of it comes back. And I do think that I would give credit to the retail, commercial, and corporate teams that they also do their homework on who to give money to. There's a good news story with the credit loss ratio. Even with those clawbacks of provisions being set aside, we will still be below 1%. So that means between those loss ratios and the capital we hold, we're in a very, very strong position to lend to this economy. We've got the capital muscle, we've got the lending experience, we've got the monitoring mechanisms, we've got the collections mechanisms, and we are looking for instances where we can do lending that is transformative. So some of these big projects that are coming up, we are saying openly to the market that we are ready. We do think we've got the muscle to lend a bit more, and we'll be going back to the institutional investors and asking for deposits to be routed through us so that we can lend to it responsibly. We do think that when pension funds lend directly to the economy, they probably take a lot more risk than they realize. And I think there is an opportunity to collaborate with the banking sector to make sure that those investments are appropriately guarded and supported. Dividend, the dividend that we are proposing that has been approved by regulators, it's just awaiting AGM endorsement, is at its maximum. It's within our policy range, and we are paying out what we can, the highest number that we can pay out. So we do expect that at the end of the day, the total dividend for the year will be somewhere between 170 and 175 projected million between the two numbers that we showed before. So it's at maximum rate at the present moment. And the capital that we are not paying out, we do want it to support the lending strategy and the lending opportunities that the team sees. Thandeka, is there anything you wanted to add around the lending piece?
Thanks, Dennis. If I were to add anything, it would be just to say that from a collections perspective, one of the things that we believe we do well is engage with customers. So immediately when you go into areas, we have a conversation, we talk to you. I think what we focus on is to have you or find ways in which you can pay the money back rather than us rush to sell your assets. So I think the engagement model has been quite robust and very proactive, which is why our numbers are this low.
Okay, sure. Thank you, Thandeka. And you will forgive the aesthetics with the passing vehicles. But just to add to what you were saying, Dennis, with regards to just answering the question around the retail offering, and I think although we see institutional investors, one of the key things and a good story to tell from an FNB point of view is after we listed, we were literally all of our employees from an employee share trust point of view, felt they owned a part of the business. So even though it looks as though there isn't that direct impact, there definitely was. And when we speak dividends, we are actually speaking that part of our employees as well, as part of the employee share trust, actually received dividends, which is outside of what is the normal remuneration that we would have. So the definite feeling of being part of the business, as well as feeling that there is individuals that feel the impact of this listing and this localization of shareholding has been key. Can I take the next question? Bongeni? Thank you, Mr. Mbingo.
Good morning. Thank you, Zetu. Good morning, CEO. I firstly want to share, Manesohambile Muzi, Bengfuna Namgushulo Gutsi. Well done on your presentation. I hope that my questions will not be negative, so I will shoot as far as I can. In fact, in trying to be positive, I want to pick up on your suggestion of a job creation national position that you are suggesting the country could look at, and I think it's a very good suggestion. One will ask how far you can take that with the relevant conversations taking place, but also now internalizing it at FNB. The more that you expand on your digitals and other solutions, you obviously will be tempted to cut. I don't know, maybe tempted is not a good word, but you will be cutting jobs here and there because you've got all of these solutions. So how are you juggling that aspect of job creation and also staff retention and also finding talent and skill? I see that you have very young looking Njabulo people around you. And so obviously there is a sense that you are doing a competitive running a competitive business where everybody has got to bring their A game. So how are you juggling those two things? And then my main question though is over the past 10 years, if I look at your slides, the business has grown exponentially, extremely high, unmatched. And I congratulate Thokozane for coming in at this point. It looks good. So one is tempted to ask then, Gogutsi, where to from here? And when I say where to, I mean in terms of the business. So what's next? Where next? Now this is for the outgoing guy. Obviously, when you perform like this, I mean, there should be offers coming from here up to Skupe for you know, for what you've done and achieved at FNB. And then I will end with this question, obviously relating to the CMA. I can see that the central bank has tweaked a bit and is plugging the gaps, if we can use that phrase. But I want to ask in terms of the leaks that you brushed through, koguthi ingabe one, were there any related shocks when the thing came out in terms of, whoa, nababantu kuthiwa bebenda A, B, and C, and you're right, I didn't see FNB in those little things that we saw. But did it impact on your business for that short period, if anything? And has what the central bank done been to manage those kind of risks of information or of people behaving in this way? Thank you.
Yeah. Okay, can we just answer those and then move on to the next?
I think I'll have to be very strategic with this one. Can we answer the last one first so that I can have time to think about the other two? Penuel, why are you he's facing the wrong direction. Penuel, please come close, Tsenekwebo, and help answer around whether any shocks impact and what has happened around the way forward.
Thanks. I think obviously my customer that were highlighted in the articles. So obviously there was an angst from customers to say what is actually going on, and we had to engage with those customers and tell our story from an FNB perspective. So obviously we are an entity that's operating within a certain regulatory framework. And within that regulatory framework, there are obligations that are placed with us, and we did the disclosures that we did to our regulators in terms of the principles and the requirements that are there. So ours was to engage, explain, and provide comfort to the customers that were impacted. So we didn't see what I would say perhaps was a fallout or a negative outlay of customers from doing business with us. But once that assurance had been provided, and also to commit to our customers how protective we are as an institution in terms of dealing with their information, they were comfortable with how we dealt with our end of the bargain in terms of the reporting obligation. So I would say there were no negative outcomes from a customer perspective. But what we've also done is also to look internally as FNB in terms of what is it that we can improve to further safeguard, the customer information. So there have been tweaks in our reporting mechanisms that we're doing with our regulators. And we also did engage with our regulators to explore the avenues that we can use that are more secure and to protect any future leaks. That is obviously an item that is still being dealt with by the regulators. There are engagements that are ongoing, and we believe that there will be a closeout with FNB. I think they have reached to other institutions in terms of what has happened, and then what is it that you can contract going forward to make it more secure. Thank you.
Thank you. So the ongoing engagements around the leak story, it was very uncomfortable. I think with every leak that was published, there were meetings long into the night around how do we continue to protect customer information. But the decision that has been made is that the law is the law. We have to comply with the law. But we have advised, given feedback to regulatory agencies around where we think the law can be tightened, where we think processes can be tightened, and where we think we can actually ease anxiety. From a customer standpoint, you don't want to go to bed wondering if your personal finances will be splashed in newspapers. None of us wants that. So we've worked over time to engage honestly and fully with those. On the job creation piece, so our thoughts, thank you for the question, by the way. Our thoughts are, there is a job growth intent at a policy level. How does that translate away from just looking at FDI only to say the existing corporates within the country? How do we coordinate what the targets are, how we individually report on those targets, what segments of the population we are chasing after, and how are we doing it in a manner that is coordinated? And what incentives should we be giving to the private sector to encourage them to solve for those targeted segments of the population. We don't think the answer lies only in FDI, because FDI, in terms of timing, in terms of scale, is always an uncertain conversation, a good one, but an uncertain conversation. How do we encourage the existing private sector to do this balance that you're talking about between technology and employment? And then for us as a business, we could have cut a lot more jobs than we actually have. We've had a very deliberate plan and in agreement and under the support of the board to say where we do have changes driven by technology that are saying we should drop headcount, the priority has been where do we use the impacted people in the business? Where else do we use them? So we've preferred to default to a redeployment model as opposed to a go-home model. We definitely have the capacity and the technology to probably have 10% less staff than we have. Fortunately, this time around, the payments developments are creating opportunities for us to redeploy staff to make sure that we support what is happening around payments. So for that reason, we are relatively okay. I think in summary, yes, we're keen on technology, but we don't think it should be technology or people. It should be technology and people. That is, in any case, how we see it. But we can unpack it further as we progress. And you made a comment about our team looking young. I know that some of them may look young, but I think there's fewer and fewer over time that can sit with the youth in church. So they may look young, but I think they've matured in the business. I think we've got enough maturity. It's a nice blend at this point. Where to from here around the business? I think when you do engage with Mr. Dlamini and the team going forward, there's a powerful story that's coming out of there on what should FNB look like in 10 years' time, in 20 years' time. And I think I'll respect his views and his thoughts on the matter. But we do see an opportunity to not just flex to the maximum allowed by regulations, but to also consider how we can reinvent aspects of our business to make sure that we handle the customer holistically. We do think we should be a primary touch point with everything that the customer needs when it comes to financial services and financial support. And there's definitely scope for growth there. I think we will articulate that in the coming 12 months. Where to from here for me personally? Thokozani actually helped me to answer this question yesterday because we thought it might come up. So the official response, I'll start with that. We've been very consistent with communication and transparency. And when there's been developments, we've communicated proactively. And when the specifics around the way to for me come through, we will maintain the same standard. That is the official response. But I suppose the underlying question, though, is that one, we are not uncomfortable with continuity because everything that we've done has been done through a collective. We've put together a fairly strong team and a very diverse team. So it's part of why we did the introduction of everyone here, because to demonstrate that this has been a team effort. For me personally, I do think, I think when I came here, I don't know if it's appropriate to share, Hlengwe and Zetu might kill me after this, but that's okay. I think we should place timelines as individuals around leadership roles. And I know those timelines will differ with industries. Because when you've got a deadline around yourself and what you can deliver, then you probably are more likely to deliver a lot more, a lot quicker, because you've placed a personal deadline. I was never going to personally want to exceed 10 years. And that's where part of the energy has come from. The second point I will make at a personal level is that it is important that we open doors for others. Leadership is very attractive, and there's a lust that builds over time. And in some of the roles, I'll emphasize, it's not the same for every corporate. It is easy to get drawn into the benefits and the power that comes with the roles. And in doing that, you can actually close the door for others. So when one person moves, 5 doors open. So Thokozani would not be here if it wasn't for that, decision with the board. So opening doors is actually quite important. And I think maybe it's just a sharing an experience from my part, that if you may allow me. in all organizations, that maximum optimal tenure will differ by sector, by industry. But over time, an organization starts taking your own character and molds itself around your personality and your thoughts and your strengths and your weaknesses. Inevitably, over time, the organization's capability is going to be restrained to your strengths and weaknesses. So when you don't move and you don't switch, the weaknesses become embedded, the strengths become embedded, and people don't know anything better. So for me personally, it is actually quite important that we as leaders make an assessment around when can I leave the stage, and leave the stage at a timing when you can deliver succession responsibly. And then lastly, you don't want succession to be informed by scandal and crisis. I think succession should be informed. It should happen when the organization is pumping at its best. That's just my personal thoughts, but as I say, it differs with industries and sectors and other factors, things that for the instance.
Okay, I think well answered. We might have one around MA, but I think we might pick it up again later. And just to probably echo what Dennis was saying around the what's next, we have committed to you as editors and as the media to say as soon as we are ready, we will have a press conference to now sit down and say what's next for FNB. So we are recommitting to that, and we haven't forgotten. It's just an issue of timing, and we will get it right, and we will do it sometime soon. The nation, Mr. Makubu.
Thank you, CEO. I see that you've been inviting us to ask questions, Gakulu. You remind me of Barnabas. Whenever we started a breakfast, he used to say, Mbingo, chelema editors about imboti ikhona timphendvulo. Tinkundla tiyaphendvula. Today we are told we will answer you if we feel like, but things have changed. I won't ask hard questions. I do have a lot of questions, but on something that's happening now. You've been doing Forex for a week, I think now. Mane Sisu was explaining, sort of glossed over the credit card issue. I thought she glossed it over. The issue is on the whatever she had put there. She said you will continue to pay. There's a way we were paying a week ago. She then said people had been told that they will continue to pay. I don't think that's the impression I have in my mind, but I need clarity. Are we going to continue paying the way we were paying a week ago, or we're also going into the Forex thing? Because that's the impression I have, that credit cards change too in the manner of payment. Secondly, I'd like to know how this Forex thing is going in the week, because I also need it, particularly at a business level, and I sat down with my instructions and you published in the newspaper and followed them. And there was one glitch. In the area where it says, and then load global payments, that option wasn't there under Ed. It wasn't there. I phoned Matapa, I spoke to the lady, she tried to consult, she came back, ngabona ukuthi asivali. Fortunately, I know someone in the bank who understands it. Wasisothoya ngiyayibona le nto, click here, kwase kuyavela. But that's me. How many people don't find that? Now it's Ed, kube global payments. 2, if ni signing 2 on a business account, I'm the administrator. So I load this thing, and then I tell my other person, who probably is at Lavumesa, doing la kwendago, ayikho le nto emcingweni, le app. The app doesn't load for the app learner for signing, for counter signing. So I phoned my cousin who's at the bank and I say, "My say in le." No, logo kuhlukile, you have to have a laptop or a computer. It's not loaded on apps on the phone. Manje ukalavumisa usensimini lo muntu. Uyayibona into le? One, we have to do this between 8 and 3:30. Umvuka lavumisa ensimini. Bantu nabakuhambela imali yabo ngicela sisiyathi umfafika nconcothe kakhathi ngicela ndocela le phasela lami. So we are being mina nje nyalo nangisuka la, there's someone I have to go and pay. And ungithumelela message la mhla wathi kuhamba njani. So so this is creating a new problem, and I'm just wondering, are you guys kuhamba njani noma ngimngedwa yini? And why is this thing not available on the phone as normal? Because the normal transactions locally, if ngifuna ukubhadala zethu ngisayina on the phone siyacetha, but this one I'm told by FNB not on the phone, ku global payment. Akuhambi kahle.
Are those all your questions for today?
Yeah. Maneng one of my questions, we can go on, but yeah, let's share now.
I doubt it.
Kuthi aphelela lapho.
No.
But let's take that
It's for today's
now.
purposes.
Okay.
Yeah.
Okay.
No, my questions. Netimbedulo ngiyathi khona. But my questions are gone.
Thank you. I think I'll ask Camilla and Zlindile to just talk to the issues. I think there are two items that I'm going to highlight, Mr. Makubu. One, we are working on, by the way, just localizing that whole credit card offering. So a lot of what will be happening in the next, say, about 12 months or so, is to make sure that we eliminate this thing and we make sure that the credit card offering is 100% domestic. With the same benefits that were there before. I just think that's an important thing to add. And then the second one is that we've actually been inventing solutions on the fly. These changes have come with deadlines and certain commitments that were made to regional regulators. So when you institute the changes yourself, you can plan for every possible scenario and preload it in your solutioning and time the release. So right now, we've had to meet the deadline as defined as best as we can, and then we're back solving based on customer feedback. So some of what you're highlighting, I know there's a lot of work that's being done with the app to make sure that the customer experience transfers from what you knew before to what the capabilities are today and to what the enablers should be. So perhaps Camilla and Zlindile, I don't know if you guys want to add.
All right, thank you, Dennis, and thank you for the question. With regards to the credit card payments, so I'll answer the more detailed questions. With regard to the credit card payments, I think, thank you for highlighting that. I did breeze over it quite quickly in the interest of time. What we were trying to say is that you will pay for the credit card using the Forex platform. So you would have to log on to Forex online, on online banking, or on the app if you're an individual, and make that payment there. What we did try to do to the best of our ability is issue communications to our clients who do use the credit cards on exactly how to make the payments on Forex. But I do note that there are some glitches that you're highlighting. So thank you for that feedback. And we will work with our teams just to clarify on certain points. I think Dennis is mentioning that, you know, you can only plan for so much and things do go wrong, but we are honestly trying our best within the limited time that we have had to try and plan for all the scenarios around that. So the glitch on the comms, I think, thank you for highlighting that. We will sort that out. And then on credit card, we will also just expand further on how to use the Forex channel. And then in terms of app for business, we managed to launch Forex on app for individuals in time. It is a different platform in the back end to enable for business. It is on our radar. There are a few other things that are on our radar, so definitely app for business. There's scheduled payments, which is important to all our clients to be able to preload those payments. There's public beneficiaries, so instead of getting those beneficiary details to load as global beneficiaries. We want to reload them on the Forex platform, but all these things do take time, and our deadline was the 10th of September. So within that, we try to develop our platforms insofar as we can, but certain things do take a lot more time. I'm not sure, Zilindile, if you'd like to add anything further.
Yep. Thank you. So let's engage. We've got specifics. Are there any other thoughts? There's someone in the middle.
Tabiso. Oh, there. Yes. I think maybe just to add on that, Tembi and her team also play a crucial role in just giving us insights onto what the customer feedback is, and it is monitored daily, and we are trying to essentially collate that bank of knowledge with regards to the on-the-ground customer experiences, and try to proactively over-communicate around that, and try to proactively pivot our customer education around that. So it's a daily process of what's in and what should go out. But again, we will try to do better with regards to just ensuring that we enhance the customer education, including also giving some of the how-to guides so that it's clear around what the steps are as well. I hope that answers it. And as Dennis said, Tembi will come to the mic and give you her number so that it's not just dependent on who you know in the bank, but it's also institutionalized from a customer experience point of view. Can I take the next question? Martin, thank you.
Thank you, Zetu. Thank you, Mr. Mbingo, for the wonderful presentation. Kuncane kwami nje just kubonga on behalf of my son for the coin solution. He loves FNB now. The second one would be to just quickly ask, in terms of CVSET, for which we see is quite heavily indebted, and I see your customer is growing, your customer base is growing. And just to ask, I didn't quite get it from the presentation, how much investment is going into financial literacy and issues around debt counseling? Because when we do, I heard one of the officers say you do engage people when they run into some serious challenges. How much investment is being made into that debt counseling area and space to sort of address this issue, which is really becoming quite a crisis? And then the last one would be around costs with regards to your services. A lot of services being introduced. Would you say your costs for services are going down or they are going up, just for, purposes of probably for the customers out there? Thanks.
Thank you. I'll try. I will ask our team to add on to that. In the interest of time, I'll just try and run through it very quickly. Around costs, the fee structure, we've been very awake to, you're working against yourself if you grow the fee structure in a manner that becomes problematic to customers, because ultimately they will leave. So what we've done in response is to make sure that we don't grow above inflation. And every year, where we've had these conversations on renewal of fees, fee approvals with the regulator, we have tried to identify areas. I'm looking at Mnetsi and Sibo. We've tried to identify areas where we can actually reduce those fees. And that exercise is not one, you're never done. So whenever there's an opportunity where we think we've got enough scale, and there's an opportunity to drop fees, we do take that. We've been disciplined around not exceeding inflation, but where there's opportunity to cut, we're always looking for those instances. Financial literacy is a big issue. I don't think it's one that we've tried. I think through the segments and through marketing, if you check what happens in our social media, we've done this for a few years, but we don't think it's enough. We do think at a curriculum level, at a policy level, something needs to change. And we are encouraged by actions we've seen coming from the government on reviewing just curriculum to make sure that this is essential. Whether you're studying to be a teacher or a doctor or ultimately want to work in the security services, all of us. And the way we see financial services, by the way, is the way we see hospitals. At some point in your life, you have to interact with a hospital. If it's not at birth, it's halfway through or at death. And financial services is pretty much, I think like that. So for us not to have deliberate curriculum around financial literacy is not good. It's not good for the country, it's not good for the economy, and opens our people to exploitation. We are looking for ways. We've invested deliberately and consciously. We've actually had a conversation within the Bankers Association to say, how can we collaborate? It shouldn't be an individual bank conversation. What can the banking sector do together with regulators, together with the government, together with the education infrastructure in the country to have a common message around financial literacy? So it's work in progress. I wish I could say we are one and done, but we are not. But we agree with you, including the debt counseling piece. I think there's sufficient regulation and capacity for other service providers in that regard. But under retail, we are looking at creating a financial advisory capability within FNB that just focuses on, I'm stressed, I need help, not I need money. I need help, and the money can be part of the help process. Not all problems immediately need money. Sometimes it's just a question of restructuring your balance sheet and your lending. So we are trying to build something within retail to address that.
Njabulo, would you want to add on? Okay. Yeah, I think also what's crucial is sometimes when you speak about this issue, money management issues and financial literacy, platform is also key, which is where we now need to come to the fore to say, how can we partner with platforms such as yours, Ngozi, to just make sure that the message is spread and it's spread well. So I think in as much as you can push the message, the platform is just as important, and the partnerships therefore come to the fore, because we might sit here with the knowledge and expertise and also with the insights around what Eswatini is struggling with at this point in time from a money management point of view, but we don't sit with the platform. What we can use is our own platforms and our own channels, but we only reach our own customers, whereas we need to reach the broader Eswatini. So with that, I think we would welcome conversations around that partnership on pushing financial literacy and money management issues. Any other questions? Okay. Yes. Thank you.
Good morning. I'm Sihlenge Wenyembe from Sibaya Umbrella Funds. I represent the funds, yes. Firstly, I'd like to congratulate FNB for localizing in the manner in which they did. I think my question would be a rider from Muzi here, that in terms of retail, we definitely understand how you did it through the funds. I think it's a very good start, but also it's only retail in terms of a person being linked, to an institution. But I'm happy to hear that Mr. Mbingo has said the conversation is ongoing. I'm happy that Hlengiwe is smiling about it. And I think I do understand the rush and everything that happened. I think I was involved at first, the first invitations. I think I understand how it was done, the way it was done, but it would be great to actually move into retail in the strict sense, of retail. My second question, in terms of the fuel swipes, Mr. Mbingo advertised that. I love it too myself, but I'm not sure if the petrol stations are bluffing when sometimes they say we don't have the FNB speed points. So I'll leave that to you guys. And then in terms of the cross-border debit orders on the CMA now, I would just like a bit of clarity, in terms of, is it something that is going to happen? Is it something, I mean, because it's only starting, so I'm not really sure. Is it something that's going to happen, that the debits continue cross-border, Or because I heard you say that you've got to put reminders, you load and then you put reminders to always do the payments? Or is it once you've loaded, then you can schedule the payments? Or you've got to do the deposits every month? I think there's a bit of clarity there because, you know, if you're paying for insurance and all of those things, you really would like some stability around it. I'm also happy to hear that the processing times are going to change. That's very good news in terms of the CMA payments. And then I heard Mr. Mbingo, and I'm very happy about that, imploring the funds to deploy the investments through the bank. I mean, with the 30% cap, obviously, because I'm coming from the funds, in terms of the 30% local assets that we should hold as funds, it would be nice to have something, you know, to invest in, especially with the talks that in the near future, we are going to be moving to 50%. So it'd be nice to have something for the funds to invest in. But overall, I think well done to FNB. I literally think FNB is a true definition of dare to be different. Thank you.
Yeah. Thank you. Positive feedback. I think just quickly on the fuel stations, we haven't stopped. I think we've got a dominant presence, a dominant market share of our fuels, of the local fuel stations, and that's not going to slow down. We are looking for more because there is a benefit that you see. When we say that we've got swipes that's around 1 billion, we do think that number can triple if we continue in that direction. So thank you for the positive comments. On the shareholding piece, comments well taken. You say Hlengwe was acknowledging with a smile, so she is going to go back to the board and with Mr. Dlamini to, I don't know what the waiting period was, Hlengwe, but to revisit the business case when the time is right. Because as you will know, it will be business case driven. Local content, fully supported. I think Camilla and Namiso especially are looking at structuring between treasury and corporate a solution for you guys to provide an avenue for some of that local content. So we will be coming back to you individually. We've already met, I think, a couple of institutionals to sell some ideas. And we do want to design products that are specifically for you, asset managers and institutionals. Is that a fair response? Do you want to top it up? And then on the CMA, she wants to add very briefly. How much time do we have?
Just a couple of seconds. I am aware that it is getting colder, so apologies for that. Again, it's the aesthetic. So siyaxolisa kakhulu bekunene, we had hoped it would be sunny.
All right, thanks for the question on the debit orders. So unfortunately, the new SWIFT system that we've migrated to doesn't have the ability to perform debit orders. So you will have to load your payments to your recipients on global payments and make those payments and set the reminders. It is something that we are looking at on how to solution going forward, but unfortunately, as it stands now, it's something that you'll have to proactively pay yourself on global payments on Forex.
To innovate around it. Yes. All right, cool. Thank you.
Okay, thank you. I think there's one more question. So maybe I'll allow one or two more questions. Snetemba? Good.
Okay, good morning. I have just one question. It's around the legislative framework. How big or wide a gap is there in the legislative framework as it relates to the financial space? Are the stakeholders moving as quickly as they should? And how does that affect the planning and the service delivery? And also looking at those gaps, what are you actively doing to augment? What kind of legislative landscape are you operating under?
Okay.
That is broad, Ngozi, but... That is very broad, but...
Can you take the other question as well?
Okay, yes. Tabiso, Ndogozo, inside please.
Thank you. Congratulations again, CEO, for the numbers. My question is on, you touched on the digital segments, the revenue side. What I wanted to try and find out was, in terms of the business, the portfolios, stuff like commercial property, in terms of revenue, how did that really perform? Because just as recent as last week, the Minister of Finance did mention that they've seen an increase in people taking personal loans, but from unregulated players, so that's not your FNB. So in terms of just that space, how has, which means probably you've been giving less loans on that side, but just in terms of the performance of how did that really play out?
All right, cool. Can I start with the latter? Just quite quickly. I think we haven't showed it here in the interest of time because we thought we might unpack too much. But in terms of the detail that you are going to get and when we do the annual report, you'll see a lot of, I think, Njabulo breakdown of some of the data. But all three segments have performed quite exceptionally. I think there's been growth across all three portfolios, retail, commercial, and corporate during the course of the year. The point perhaps I would make to answer your question is, and maybe it speaks to what was raised by one of our colleagues earlier, part of why we've got lower loss ratios is that our lending, especially for retail and commercial, is data-driven, largely data-driven. So we lend against not just the proposal, but there's a lot that looks into the transactional history and repayment profile of the customer. What it does for us is that we lend against, or we lend to opportunities where we know the player. You know, we know the jockey, understand the jockey, we know their history. And therefore, we become a lot more comfortable in deploying capital for those opportunities. You made reference to commercial property portfolio. It's been strong, and I think we went hot for a couple of years, but we're now a lot more cautious, Tandega, because you can only do so much within the population size that we have. So we haven't closed the door. We've funded quite a few opportunities around the country, and we're still interested, especially in areas that we think are underserviced. There are pockets within urban and peri-urban areas where communities still have to travel long distances for certain services, and we have a fairly good sense of where those areas are. So we were quite keen to head in that direction, as long as we've got the right developing partner. And then we are on the lookout for those opportunities because we've got the capital. I hope that does answer to you at a very high level, but we'll provide the data at a later stage. Legislative framework, Snetemba. I think a lot can be said. There's certainly efforts in our reading, and I'll qualify it in our reading, from the state to have legislation that is enabling. And we see that and we appreciate it. We've seen in the last few years the National Credit Act, we've seen payments legislation, we've seen proposals to, I think, upgrade the Financial Institutions Act. So in terms of financial sector legislation, I don't think, Klengwe, there's a lot of discomfort, Penwell. Where we have a curiosity is legislation that affects other areas, which then fits back to our ability to service the community. We've seen legislation, for instance, around proposed legislation around land use. We've seen proposed legislation around pension funds or provident funds, what they should look like in the future, how to provide social security safety nets. We've seen legislation. I don't think today there's too much in terms of legislation that doesn't fit back to the sector, because as long as it affects customers, businesses and individuals, it then fits back to us around enabling the funding and the transacting that opens access to those specific areas. I would say financial services is probably a tick because there's a lot more engagement whenever those legislative pieces are going to come through. We do think there's an opportunity, you asked about gaps, for drafters to engage with the private sector a lot more, and especially financial services providers a lot more. Because it becomes difficult to amend legislation after the fact. We also are talking to our colleagues within the financial services environment to say, let us also pull up our socks in speaking as a collective. It should not be FNB alone going to the legislative arm of government, but it should be the collectives, whether it's through business federations or through the Bankers Association, to have a much more deliberate, intentional engagement model for the benefit of the country, not to protect our interests, but where we see gaps, we should be able to say that and say it loudly upfront before laws are signed into acts. So I think there's an opportunity for engagement. Thank you.
Okay, thank you. I think that was the last of the questions, and thank you, Dennis. Thank you to the colleagues as well who helped in putting everything together. And again, I will echo what the shareholders and the media has said, and that what was at the back of the cup, good results, good results, even if we say so ourselves. So thank you very much. Unless there's any other questions pertaining to that. I think we've come to the end of the program. And again, njengoba ngisho maye siyabonga kusihlonipha njalo masinicela ukuthi nite lokuthi nivele ekseni noma kusemini noma kusensambama masinibita sibonga kakhulu. We don't take it lightly. Thank you also for just working with us throughout the year to tell the FNB story and tell it in the way that we want it to be told alongside you. We never come in with bluff. We never come in with wanting to sway what is the truth, but you are always forthcoming members of the Fourth Estate in just helping us tell the FNB story in the right way. So also to our shareholders, siyabonga. It was the start of the marriage last year, and it looks like it's continuing in a good way. To the regulators present, thank you very much. And to my EXCO colleagues, my siyabonga kakhulu as well. And as well as the FNBers online, those at work, as well as those that are customers and are joining us online. Thank you very much for sitting with us through this session. And through the cold, I think my team also didn't tell me something, so they have some fleece warm blanket stuff in there for you. So maybe they preempted and they knew that it was going to be quite chilly out here today. So before you leave, please make sure that you just get a pack from us. And breakfast is served, well, it's brunch now, right? Brunch is served at the edge there. So thank you so much. Ni hambeni kahle.